Hello friends, how are you? Good week and happy Easter for all of you who celebrate that. And I wish this long weekend will be wonderful for you and for your family, and you have a great time. This is a weekly review, and it's very important for me to say that the market is going to be back normal only on Tuesday, as on Monday it's a holiday, and many banks across the world are closed, so the volatility of the market is expected to be very low. Keep it in mind when you are going to trade. And now, officially, this is the first week. This is going to be the first week of April 2013. Very interesting months ahead of us. As I told you at the beginning of March and April tend to be good months, good periods, interesting periods. March was tricky, so I personally expect April to be really interesting with great opportunities. I will not waste a lot of your time this week, as I did on the previous weekend. I'm sorry again for taking more than a half hour of your time just explaining the things. It was just very important to me to explain everything. I have several very interesting points to mention, um, and several potential trades very interesting to go with. The first thing I would like to start with will be silver. Normally, I don't start with commodities. Watching on a daily chart on silver, what can we see? We can see that there is a potential wonderful divergence, bullish divergence, forming. Now, why I think this is a wonderful opportunity? If we take a look on the bottom of this line, and if silver successfully goes lower and reach something like 27, 40, 50, maybe even a bit higher around 28, maybe even a bit lower around 26, 80 or so, it's going to be a very interesting bottom. As we can see, the silver is trying to create something that looks like a wedge or so. There are clear several points here. 1, 2, 3, 4, 5. We might now go for 6, and after 6 we might go all the way for a retrace and pull back to the 7. 7 could take us with a break and take us up all the way again to 31 and higher. So from my point of view, silver is about to create a buy opportunity. Now it could be 28, it could be 27.50, it could be 27, it could be 26.80. All of those levels are very okay as long as we have a stop, clear bullish candle pattern, and MACD turning its slope of the histogram positive again. That's a sign to jump in. Personally, I would recommend here to go with investor style, which means no stop loss. You know that from my point of view, stop loss for commodity is ridiculous. I don't say I'm right. I say just say this is my point of view. So this is kind of an investment. If you go with that, hold it, and this could be the first wonderful attack. I do think it will go all the way up to 31, at least the 200 moving average or so. Then it might go and rise all the way higher to 32, maybe 34 again. I'm very positive and bullish in my opinion for the silver from the expected bottom. In case it retraces from here without reaching the levels I just mentioned, just go with the break of this wedge. Should work very well. On a weekly chart though, we can see that also there is a monster support around 27, monster support. If it will be broken, there is one next around 25, but also on weekly chart we can see MACD starts to push up, which means the power of the current bears is getting weaker and weaker, more and more. So from my point of view, silver is getting ready for a buy opportunity. For gold, I am not pretty sure though. There is a trend line. I wanted to break the trend line of this interesting channel. I'm really not convinced now about the price action from here now for the gold, and that's why I prefer to skip that. And now back to Forex. Um, Except the opportunities I've been analyzing on the last few weeks, like the pound New Zealandian, for example, like the Aussie franc, like the Euro Aussie, which I will repeat today. There are a few new things I found very interesting. One of them is Aussie against the Kiwi. On a daily chart, it's pretty clear it is trying to create a hidden divergence between these two deep lows. But there is still one low here, and if we compare it to the current low, is creating from this low of the positive histogram to the current low, it is creating a bullish hidden divergence. It means that the Aussie Kiwi most likely is coming to the end of this down move. Could it still push? Yes. It still could play bit lower, around 124, maybe 123.50 or so. And it might be double bullish hidden divergence between these two lows and between the deep two lows in case the MACD histogram keeps going bit lower for the next 2-3 candles. And then on the 4-hour chart we have a bullish divergence already, which means we should go and get ready for a potential buy. And from my point of view, a good buy will be sorry, that's not the line. A good buy will be here, right here, with the break of this resistance, which is around 124.60. Should be good and should take us from here higher to the trend line here. This is the trend line, and should push us back again for something like 100 points at least, right? And this is, from my point of view, this is great really great opportunity. In case it pushes a bit lower, the levels to pay attention to 124.20, 124. This is the range. Then 123.50. This is the levels to pay attention to. I do think Aussie Kiwi is building a bottom, and for the next several days it will continue with the bottom and start to pull back all the way up. This is the main interesting opportunity, new opportunity, just except the silver, of course. Now going to the Euro Kiwi, Euro Pound, Euro Cable, not Kiwi, and the other Euro pairs. Well, I assume that you are reading and watching many reviews and interviews and analysis about the Euro situation. Goldman Sachs said that Euro is going to one level, to the parity level. Now, let's take a look on the Euro dollar before that, okay? Now, I don't claim it could not happen. It could, but I would say so. Pay attention to the weekly chart. It's making a band-to-band move. Could it still go a bit lower? Of course, of course. Personally, I hope the Euro dollar is going to something like 125 or maybe lower. For me, this range, this current range here, okay, between 125 to 126, it's very important range. Let's say, in other words, I would not be surprised at all if the Euro dollar will continue down to here, and from here retrace all the way up again to above 132. I will not be surprised at all. Remember how it normally works. When everyone starts to say the euro is going down to parity level, it's time to get ready for retrace. Remember here, everyone, when the euro crossed the 135, everyone said euro dollar is going to 140, 145. Remember? And I told you, get ready for a potential retrace from 137. If this level would be broken, I would be reanalyzing the next level, of course, but 137 held. And bam, from here we are almost 1000 points below. So in other words, I think euro dollar, if it continues lower, it's a wonderful buy opportunity, because on weekly chart we will get a bullish hidden divergence if it keeps getting a bit lower, right? A band to band move, right? And it's a wonderful combination with a daily bullish divergence form already. It's going to be wonderful buy opportunity. Now, if the euro dollar will continue to move on this, take a look here, okay, this trend line, okay, and push down from here lower. In other words, as long as this line holds, from my point of view, euro dollar is under bearish pressure, but around 125, 126 range, it's, from my point of view, get ready for a potential buy. And because of that, I think euro pound is creating a bottom. I still think it is very able to reach 08250, 083, 20, 30 range before the retrace up. Very, very able. Then I think from something like 083 down to maybe even 081, it's going to create a stop and then start all the way up again to close the gap above 08620. So, gentlemen, ladies, start getting ready for a potential buy, or if you're in investor style, start to buy the euro pound. It is creating a bottom. It could be here, it could be a bit lower, it could be even a bit lower. It's going to create a clear bottom here on the weekly chart, clear bullish hidden divergence, or from here or from a bit lower. It's all okay. It will take time to create it, and right in a few weeks it's going to make a stop and push up again, at least to close the gap, and that's a wonderful opportunity from my point of view. Euro Aussie, same story, more than 20 candles, right? Continuing divergence on a weekly chart, band to band. It still could push a bit lower. If it does, pay attention to the level in between 121 down to 120. This is a critical level. I think it will create a bottom here, maybe a bit lower, and again it's going to retrace all the way up again to close the gap around 125, 40, 50. Same about the Aussie franc, which is exactly the opposite. More than 20 candles, right? Continuing divergence. From here, could push up again to above the parity, or could continue all the way lower to something like the 200 moving average. First step to pay attention to, and then maybe will take us all the way to this trend line, which means something like 090, below 097, right? If it does push higher, then pay attention to above the parity, closer to 101, 10050, 101. Definitely levels to pay attention for a potential next sell, as the divergence is already here. And on a weekly chart, we might see a head and shoulders. Shoulder, head, a potential shoulder could be created right now again, right? And between these two highs, there is no hidden divergence yet, but between these two highs here, there is a bullish convergence, which means definitely we could expect for a deeper correction before it retraces higher. And these are all the Aussie opportunities I see in front of my eyes, and of course Euro opportunities I see in front of my eyes. Now pay attention for a very interesting pair, Euro Yen. You remember I said many times that from my point of view it is going down. I still think it could go even lower, but pay attention for that. You see that? It is still holding above the broken trend line. Still. If it will break down again, it's very bearish sign that will take us back to 117, maybe even 115, maybe even 112. Maybe even all the way to 112. But as long as it holds, I would go to the 4-hour chart. And I would say, pay attention to this wedge here now. You see this? This is kind of a wedge starting to form here. You see that? A break up again. And going above 122 again should open the doors for the Euro Yen to start and rising higher. So as long as this broken trend line is holding, play very careful with the shorts of the Euro Yen. Once it will go down again below this level and below the psychological 120, which still cannot break and hold below, all right, be very, very ready for a potential retrace up from here, maybe even to new highs. Maybe from here we're going to new high like 132, like 134, to create the next divergence on a weekly chart. Very, very, very likely, very reasonable, as long as this broken line is holding, as I just mentioned. Very important to pay attention to that. If you remember on the last week, I've been talking and analyzing about the Aussie Kiwi. I told you I expected to go down from around 107, 107.40. Um, well, it does, right? It is going down. There is nothing mm, scary to pay attention for now, as the MACD slope is still bearish, stochastic slope still bearish. RSI though is playing around 50, which is uh, get a kind of a warning sign. It still did not create a bullish hidden divergence, but it might. It might go and form a bullish hidden divergence, and if it does, it could be a bullish push higher to above 107 again. In other view, if it breaks below the 105.50, 105.40, could be great run all the way to 105 and then to 104. So I'm still bearish in my opinion for the Aussie Canadian unless this bullish hidden divergence is completed. What do I mean by completed? That it creates another low on the 4-hour chart and create a bullish regular type of divergence or continuing type of divergence for on the 4-hour chart. Then it could be great buy opportunity, not sell. Right? That's about the Aussie against the Kiwi. I still on a bullish opinion about the pound Kiwi for a very long run, and well, now it is creating something like that. It could be a sideways move with 1, 2, 3, 4, 5. Maybe now we go all the way to the 6. Anyway, based on monthly chart, as you remember my analyze, I keep very bullish opinion. I think on the next month it's going to create a bottom. The bottom could be current level, the bottom could be 175, bottom could be 170, 165, very possible, but this is the end. Such a monster divergence forming here that I expect it to flat up all the way, at least like the previous move here. So in other words, back to 20 or so, maybe even higher. Definitely a lot of up move is forming on this wonderful pair. That's, let me check my list. Talk about that. Explain this one. Well, that's my main opportunities for this week on the Forex market. Remember the pairs I've been analyzing, like euro against the Hungarian forint based on weekly and daily chart. We could expect more down to go. Dollars are the same story. Let me just upload it here. Right, based on weekly chart, it's a very strong divergence. Why I show you these pairs? Because of the swap trading. This is kind of pairs. If on your account you pay swap or gain swap, and it's not Islamic account which means swap free, these are the pairs to hold for a long run, for several months or maybe even a year or more than a year, just to enjoy the swap. Right? These pairs pay very well, and at the end of 1 year, for example, you could finish with like 8 or 10 or more % just from the swaps. And if the pair will work with you, then it will be additional profit to the swap. So it's really wonderful opportunity from my point of view. Very safe. But of course, if you trade swap trading, you never use leverage, never, as this is one trade or maximum 2 trades from a pair, holding for a long run, accepting a drawdown. So if you go for such thing, just keep in mind, no leverage at all, and it will still allow you to gain something like 8, 10, maybe more %, depends on the amount of the pairs, swap pairs or carry trading pairs you hold. A few words about natural gas. Well, you remember my words. I explained I expected to stop it between 4 to 410, maybe 420. Well, it's still playing around the top, and I do think from here it will face down to 370 or 375 or so, at least. If it keeps pushing a bit higher, then you remember my next levels 420 or so. um, I do expect a strong retrace. Now about the indices, well, I don't have nothing new to add. I just will say what I already said many times. I do think these are the last weeks of the up move for the indices. From there, I expect for something seriously bearish to come. I don't claim it's going to happen on April. I don't claim it's going to happen in May. It could, and I'm selling already. That's why I'm very strong on my opinion. And the reason for that is as weekly weakness, weekly RSI topping, monthly monster divergence forming, and of course the daily divergence forming over and over again and again. I do hope very much that the retrace will come soon, because if not, then during the summer something very, very, very bad could happen to the indices. That's all, friends. I promised you it will be shorter than the previous week. This week is only 21 minutes. I guess it will be 22 until I finish talking. So I wish you again happy Easter. Thank you very much for your time watching this video. My main new trades are silver and Aussie Kiwi, as you saw. A really wonderful opportunity from up on a few. Pay attention to all other pairs I explained, and I wish you good trading, happy week, happy long weekend, which we enjoy these days. Enjoy the holiday, and enjoy, for the football fans of you, enjoy the Champions League this week. Once again, thank you, friends, for your time. Yours, Vladimir Ribakov.